Welcome to this episode number 66 of your next trade. Code today, NVDA World. So on Thursday, we had the earnings of NVIDIA and the stock was up 15% on the week. As you can see from this table, the S&P 500 is up 534 points for the year, and 167 points are coming only from NVIDIA. So in other words, 1/3 of the performance of the overall market, we are talking the S&P 500, but you could do the same with the Nasdaq 100, is coming from one stock which is beating all expectations, went from very few billions to be making this year roughly 100 billions more of revenues with more than 50% margins. We are talking a company that will be making 50 billion free cash flow for the year. So the question going forward, is it sustainable for NVIDIA to keep those market shares and keep those margins? My view is still the same. You don't find the trend, but it's very hard to see any company that in the long run manage to keep 50% margins in very competitive world like the semiconductors. But pretty much the market is very driven by those very few names. We are talking artificial intelligence and technology. What has been very interesting for the week, as we're going to see later on, is we have seen a lot of dispersion for the week. Why? So if we jump for the week-to-date asset performance, you will think that the market has been barely moving, where the S&P is flat for the week at 0%, a bit of a performance from the Nasdaq Composite. And as we're going to see, this is mostly due to dispersion between sectors and industries. Overall, the big winners have been in the crypto space with Ethereum, which is pretty much what happened at the start of the year with Bitcoin, and probably very soon the authorization of the launch of new Bitcoin, Ethereum ETF. So the space, and more specifically Ethereum, saw a lot of inflows going and a bit of front running the authorization by the SEC of some ETFs. Other than that, you see that space for the FX dollar has been flattish for the week, and we've seen some profit taking in the commodity space. An interesting move, as we're going to see later for the technical analysis, with copper, WTI, gold. So a bit of technical and tech profit for the week. What about the year-to-date industry performance? The winners are still the same. I'm more interested into this one, which is looking at the week, what have been the winners? So very few winners. We are talking solars, we are talking semiconductors, we are taking technology. But as you can see, many losers. So in other words, you have a flattish market, and the volatility has been very quiet. If you look at the realized volatility and implied volatility, we are below 13% for the implied. The 10 days realized volatility for the S&P is below 10%. So very little volatility on the index, but in between, many dispersions where you're going to see some big winners and some big losers. So looking at the sector performance, just as I just mentioned, technology 1.6%, mostly driven by semiconductors, NVIDIA of this world. And other than that, S&P flattish, nothing happening, and you see really some taking profit on energy, commodities, real estate down 3.6%. So what about the rates? Looking at the US 10 years, so US 10 years, we are roughly around 4.5%. That has been the kind of the range between 4.4 and 4.6%. Going forward, we get some interesting numbers coming into this week. We have a lot of bond supply on Tuesday and on Wednesday, specifically on Tuesday, as we're going to see later. But we have the PCE on Friday, which is the most advanced, or let's say the data that the Fed is mostly looking into inflation. In terms of the steepening of the yield curve, looking at the 10 versus the 2, I think there is a lot of pain here, because a lot of positioning was for the steepening of the yield curve, and so far it's not happening. So some pain in in the rate space. If we look now at the Fed funds expectations, they are not very different from when we started the rally for stocks. If we look at the December, it's more or less the same. The market is now expecting the Fed to be cutting rates by only 25 bips for this year, so 0.25%. The changes will be for 25 and onwards, where the market is expecting a Fed to be a bit more dovish than before. What about the VIX? What about the volatility? Interestingly, on Thursday, after the NVDA's earnings, so NVDA released their earnings on Wednesday after the close, the market opened pretty strong with a gap at the open, and after that, we started to sell off. NVIDIA went from 1020 to 1050. And in the meantime, names like AMD, MSCI, so the names that were doing pretty well in the artificial intelligence actually started to suffer. So you started to see some dispersion between the ones that were still holding pretty well and actually some names that started to weaken. So as a leading indicator, always try to look at the leaders and the laggards, and that was pretty obvious that after 1 hour, AMD and other names were struggling, and the S&P, the Nasdaq really started to sell off. So volatility 12.75% on the VIX. So this is still quite low volatility. Could go much lower. So not much of appetite for volatility, both on the realized and in the implied volatility. What about the technical analysis, starting with the S&P futures. And I'm looking at a weekly chart because I think it makes sense for us as we do those sessions every week on the weekend. So you're going to have what we call the doji, which is kind of indecision going forward. You can argue that you have exactly this very similar pattern like 4 or 5 weeks ago or more, and the market carried on to move forward. But as I said, there has been dispersion in the market. What's going to be interesting, I think, going forward is we could have a big month for June for Apple because, a lot of expectations now into artificial intelligence for the name. We went from 164 to 190 roughly at the close. They are expected to do a lot of announcements June onwards. And if we want the market to move forward, to me, this is one of the big names to look at. What about the Nasdaq? Nasdaq is doing pretty well. This green candle is telling you that, so far the trend is your friend. This one, the Russell, we have seen some people saying, we're going to have the Russell 2000 up 50% in the next 3 to 6 months. And that was 3 months ago. For the time being, not much happening. What about the Facebook of this world? This is the big move. Again, why? Because NVIDIA is up 15% on the week. So overall, those 7-8 names, very few winners are leading the market. So you have a lot of concentration into those names, and passive investment is going more and more into waiting. And in the meantime, the rest of the market is flattish. The one that I want to look at is copper. So copper had a really big move of 20 to 25% move over the last couple of months. But the candle that we had last week, especially from Thursday and Friday, we had a big move downwards. So that will be the space to be looking at after so many big moves in copper, in gold, in silver. Finally, obviously, you get the NVIDIA. Look at the logarithmic chart. The chart is still the same, going higher and higher. And finally, the one that I've been flagging, looking at the DAX, looking at Europe, is still in this channel, and that will be one of the names that I will be trading. So going into what happened for the week, so this is the after the NVIDIA. So we had the NVIDIA numbers after the close on Wednesday. Market opened pretty strong at the on Thursday, and after that we started to sell off. So we went literally for 80 points on the S&P, where names, as I said, like AMD and very semiconductors that were pretty strong suffered and went from positive 5% to negative 3 to 4%. So we had a bit of a change. What I want to say is, again, there has been a dispersion in the market. When I mean dispersion is when the market is flattish, you think, okay, not much is happening. But if you look inside the market, you'll see big movers, big winners and big losers. One of the big winners has been, First Solar, FSLR, which closed as of Friday a week ago below 200 and closed this Friday at 275. So we had roughly a 40% move, almost 38% move. So that is a name that we have been pushing, or some of my mentees and some people have been pushing in the trading community for the more advanced channel. So good for them, and that means something is working. But I want to tell you, if you look at this move, this is the price change over 5 days %. We are talking some abnormal move. So this is really the outlier. So the market is very much into going for big pain, long, short. So the moves that we used to have into a couple of months, 3 months, literally they are happening in 3 to 5 days. So very different market. Why? Because of passive investment, because of 0 day to expiry. I'm going to find it. Options. So really much like the market is moving big time in very few days. If we look at the flash PMI, so a bit of macro, we do know that for the last 2 to 3 years, so since COVID, PMIs, ISM, services, manufacturing have been not as good as usual in terms of leading indicator. But it's still worth looking at it. The flash PMIs have been rebounding in the US, a bit in Europe as well. So this is the tick up that you have, as we flagged over the last 2 or 3 episodes before, is good news was seen as bad news, because if you have too much of a good news, that means probably the Fed is not going to be cutting rates, and that means that could be good for risk appetite. But that will be the data that will be looking in the next 10 days, how those leading indicator could be telling us what's going to happen next. We are going into a light week. We get the US and the UK closed on Monday. So that means the rest of Europe is going to be not that active, only 4 days. And that explains why the S&P weekly straddle for the SPY are only telling us 0.08% minus or positive for the week. So what data do we have? What kind of data? We have some interesting data in terms of earnings. We get Costco and some other names for the retail. Costco has been on the tier, really, really strong. So that will be a name to be following on Thursday. Macro-wise, we get the revision of the US GDP. I think the expectations are now for 1.2%. But we have the PCE at the end of the month. So that will be on the 31st. PCE, personal income and spending. More recently, the S&P has been behaving pretty well on the PCE, as if inflation numbers have been expecting to come down in the near future. Question mark, we have the US 10 years now at 4.5%. So in other words, the bond market is telling us, what about the second wave of inflation? We have tons of bond supply coming on Tuesday and on Wednesday. So on Tuesday, we got roughly 140 billion. So if you think about it, the US government is asking for 140 billion. So that will drain some money out of the market. Some allocation will have to be going into the US treasuries. And that means you get the crowding out effect. In other words, if you allocate a lot of money to the US government, you can't be buying as much bonds or other assets as you want to. So let's look at how those different auctions on Tuesday and Wednesday will be going. End of the month means rebalancing after a very strong month for stocks. So generally what you see is a bit of profit taking for the bonds, for the stocks, because you have the 60-40 or the funds that will be allocating stocks and bonds that will be rebalancing their exposure. And for those of you who are doing special situation, we get the MSCI rebalancing. So this is a pretty big, you have tons of names, you get a lot of stocks going in and going out and some adds and deletes. So that will be for this end of this week. So pretty much a lot of things will be happening on Thursday, on Friday. What I'm interested is the volatility through the implied volatility and the realized volatility. So if you look at the SPY, it's pretty easy. You can put it on an Excel spreadsheet and understand understanding, what is the market, how the market is behaving these days. The S&P 500 realized volatility over 10 days is below 10%, 8 point something percent. So very low volatility, but as I said, a lot of dispersion. If we look at FSLR, if you look at Moderna, you have some big names. We are talking 20, 30 billion market cap that are moving big, thinking that NVDA is a 2 trillion company and is moving by 15%, roughly 300 billion to 400 billion for the week. That tells you that there are some phenomenal moves despite the indexes being flattish. So in other words, there are a lot of opportunities. If you are interested in knowing more about what we do as a trading community, you can join us on Discord. There is one big channel for people that subscribe to the 4x4 video series and or the mentoring. They will have access to more channels. And finally, any questions about the mentoring, anything about market where you think I could be helping, you can reach me at greg@duponttrading.com. This is it for me for the week. So market will be really restarting on Tuesday. Futures will be open tomorrow, but we should be talking next weekend as well. So have a good trading week. Bye bye.